Hello and welcome to another weekly installment of Market Commentary, as brought to you by icecommentary.com and Trade with Precision. It's been a very interesting week for the dollar, folks, as most of you who are actively trading know. We started out quite quietly, though. We continue a continuation of the end of last week's very indecisive trading, small narrow range bodies. We just really didn't know where we were going above that 73 level. We're just pretty much just really selling off. We were really extended from the moving averages and the higher time frames, and it looked pretty bearish, to be honest with you. However, then Thursday, Friday came along, and whoa, what happened there? Massive moves, massive bullish sentiment came into the market here for the dollar and pushed this market much higher. It's been really interesting, actually. If we just zoom in to have a look at what happened between these two trading days, is that we have closed above most of the real overhead resistance areas. You can see all these good potential shorting opportunities or areas where you can see how the bullishness has just gone straight over all of them and just closed above. Okay, so the sentiment is there now. There is a bit of bullish sentiment on the short term. Okay, remember, by and large, these candlesticks were fueled by fundamental news that were coming out, fears for global economies, worries about the sell-off in the commodities, and that's just really started to show itself out here in the US dollar. Looking at the weekly chart, very bullish move. I mean, since we sold off about 9 months ago, we've only had 6 or 7 really bullish candlesticks that have formed, or bullish weeks, and that really is a good thing for us, okay, or good thing for the US dollar, which basically says to me, hey, there is this surge to the downside for now is potentially on hold. Okay, it's potentially on hold. So what I'm watching here, and that's what I'm seeing by reading into that one aspect of this candlestick. I mean, you can just see, just highlighting it, how this candlestick broke down through the low of last week and then closed above it. So that's really a bullish sign, isn't it? However, purely chartist, we can see we're making lower lows and lower highs. Okay, so this market is in a downtrend. We are still downtrending. So most probable would be for it to find resistance and start to roll over. Okay, that's most likely what would occur. However, last week we were very extended from the moving averages. We had traveled a long way, and it was time for a snap back up into these moving averages, because we know price doesn't like to spend too long away from its MAs. Okay, it likes to be near or around it. So I'm definitely looking long-term, mid-weekly chart to higher-term monthly chart. I'm still looking bearish on the US dollar. Okay, it's just the daily chart is starting to change, and we know that trends change in the lower time frames first. Okay, daily would start, then the weekly, then the monthly. But by and large, all these trends are still down. On the monthly chart, we've had 5 really bearish months, and end of April we were quite far extended from its moving averages. So a snapback again is on the cards. Okay, for the potential next move back down. So that's why mid to long term, I'm still bearish on the US dollar, and I think there is some downside movement. But then again, as I say, trends change on the lower time frames first. And is this the beginning of that trend change? Okay, is it the beginning? Well, I don't know. Let's look at a couple of the other currencies just to see what's happened with the US dollar and how it's affected. You can see here in pound versus US dollar, there's just been some really strong US dollar strength through here. Okay, just having a look at it. But again, it's just these are on these mid to high time frames. There's just a little bit of a pullback before the next move continues back up. Okay, Euro US dollar, same thing. Okay, we've been really pushing up quite nicely. Now we had a bit of a bearish sell-off. This is all US dollar strength. Okay, coming in and overpowering these other currencies. Aussie dollar, US dollar, again, US dollar strength. These are just pullbacks, folks. Pullbacks to technical levels before we can expect, most likely, the next thing to occur, the next step up. The only currency that really held the US dollar this week was the yen. The yen showed some pretty heavy strength, and it was stronger than the US dollar. You can see how here on the dollar yen currency, we continued to drift lower. So, which is telling me that the yen was overpowering the dollar. And that's quite an interesting thing to say, because I mean, no matter what happens, they just can't seem to devalue the yen, basically, is what they're saying. Because we get this really nice move back up, but what happens? Well, it just drifts all the way back down in the original direction. And you can see that on this monthly chart, where yen strength has just continued to push this currency pair down. Okay. What else we got? Swiss franc, US dollar. There again, US dollar strength, overpowering it. Okay, coming in and pushing the yen back up. Dollar CAD, dollar strength, overpowering it. However, by and large, these are all still in the original trend will still be intact. Okay, until some key levels are broken, and here on the caddy, we need to break up above this level here. Okay, on the daily chart, and that to me will start to show signs of trend reversal in these lower time frames. On the Kiwi, same thing, dollar strength, turned the market around and pushed it lower. Okay, but then again, on this pair, we've really started to come out into these very high term levels. Okay, when it really needed to clear out through the all-time high up there. And we didn't get up there. So what happened was we just waiting now for the market to find some kind of purchase as these rising moving averages catch up before an assault and a push back up through. So that's why the long-term trend in my mind is still bearish on the US dollar. Okay. However, this week, how am I playing it? Well, where my lines in the sand. For most of you know, we are by and large trend following traders. That's how we look at the markets. So my line in the sand would be a close above 76, because that to me would be where the trend starts to change. If we break up through that prior high, then the market's not making low lows, low highs any longer. Okay, so this is pretty much my line in the sand is 76. So I'd like to see exactly what happens with that and how we start to trade forward. 75 has been some kind of support in the past, so whether we start to find some resistance here in the beginning parts of the week, I'd like to watch that. So I'm very, very cautious of just going in and jumping in and trading this. I want to see what the market wants to do, and I'm going to read those signals from price action. Okay, by and large, that level is what I'm watching, and also how price negotiates with these midterm levels in the beginning of the week. I want to see what happens there. But ultimately, mid to high time frame, I'm looking short. But for now, I must admit, I'm looking like this. It looks like this market wants to do a little bit of a jig here, maybe a bit of volatility, and just a little bit of lower probability style trading where you got this volatility and it's difficult to pick the best times to join the trend, okay, or to trade it. So take it down to lower time frames and just really pace yourself. All right, folks, hopefully you found this useful and that the week ahead is a profitable one. Bye for now.